Market Cafe, let's talk about a stock that's going to be in focus today on the back of some brokerage action coming in, and that's going to be Trent. Now, if you take a look at what the news here is, you have Bernstein that continues to maintain an outperform rating, but they have cut the target price to 5,000 from the 6,100 rupee per share target price that they had for the stock earlier. Some reasons why they have done this: they believe that Trent's revenue trajectory has has left investors searching for a bottom. Company's reticence makes it difficult to appreciate issues, and they also believe that Trent's revenue growth is now at the bottom. So that is one key concern that Bernstein is flagging off bright and early this morning on Trent. They continue to maintain their EPS target of 83 rupees per share in FY28 at an unchanged 60 times multiple. So if you take a look at some reasons why they're talking about this pressure that they're seeing in the target price for Trent, they've said that first of it is going to be the store count. Store network over-densification seems to be a key reason right now for the sales drop that Trent is seeing, and channel checks indicate negative sales growth for many of the already densified stores. The other reason why Trent on the west side front could be facing competition could be facing pressure is because of Zudio competition, because competition is following Zudio. Yes, that percentage is still small, but still Zudio is taking away the larger market share. 27% of their overall 27% of the overall Zudio stores are having a pin code overlap with other stores of Trent. 358 stores of U-Star, Style Union, Own Plus D, Intune have pin code overlap with 27% of Zudio stores. So these are the other brands that fall under the Trent umbrella. Let's understand why the overall stress around Trent. We have been seeing this stock under pressure for quite some time now. Over-densification of stores and micro markets is something that analysts are flagging off. Increased competitive intensity, plateauing brand affinity, and consumption slowdown is the most important reason that Bernstein is flagging off. They are seeing that recovery could be possible, and here are the drivers that they are naming for recovery. Like-for-like growth for split stores needs to turn positive with a base effect. That is something that they're talking about, and they're also saying that 3-year 20% CAGR growth in Zudio network is important for recovery to come in the overall Trend stock, and improved consumer demand cycle versus west side growth is something that they're also pointing out. Lastly, if you take a look at what they're looking out for revenue, for margins. For revenue, they believe that the key risk remains competitive upsurge, and they build 19% growth for FY26 and 20% growth for FY26 to FY28 CAGR. That's on the revenue front, and on the margin front, they believe that margins have already peaked out. They're already at a peak. Further efficiency gains from here on the margins front seems very difficult, and they've cut the estimates for Star Business, and they factor in the losses from the Zara MD joint venture as well. So that is these are all the concerns that Bernstein has been flagging off for Trent this morning. We'll see how the stock reacts, but yes, a major target price slash of 1,100 rupees from their initial target price to 5,000 now from 6,100 earlier. That's the cut coming in on Trent from Bernstein.
All right, so that's Trent. And